Today, we're touching on buy and hold investing, specifically with a few health insurance stocks. And guess what? It's not as boring as some might think. We're talking about UnitedHealth, CVS, and Humana, which are not only dividend paying giants offering stability, but they're poised for growth. Let's get started. All right, jumping in here. I know some people may think buy and hold investing is a boring activity, which maybe it is, but who's to complain when it's making money, right? So with buy and hold investing, typically we're focusing on blue chip stocks that can be relied on year in, year out to pay these dividends. Thomas, you had pointed out that a great area to focus on is health insurance stocks. So the three stocks we're talking about today are UnitedHealth, CVS, and Humana. They're all dividend payers with an outlook for distribution growth. So again, a great place for buy and hold investors. So tell us a little bit more about why health insurance is an area to be looking at.
Yeah, the way that I'm viewing it, there's really nothing not to like about the sector. The industry is growing. It's supported by secular trends and government regulation. They're growing double digits this year. They're expected to sustain double-digit growth next year. AI is aiding efficiency and operations. Margins are solid. Earnings growth matches revenue growth. Free cash flow is robust. Dividends are healthy. They're compounded by distribution growth and share repurchases. I mean, this is a wealth-building sector.
All right, I'm convinced. So let's hear about these three specific stocks. Thomas, just like we mentioned, all of these stocks are reliable dividend payers, but the difference here is that UnitedHealth's dividend is growing faster than the others. So what's the story with this company?
Yeah, so all of these stocks pay healthy dividends, but what I like about this grouping is that each has something different to offer for income investors. So in the case of UnitedHealth, we have a mid-range yield. It's high compared to the S&P 500 and the fastest distribution growth rate. So if dividends are good and distribution growth is better, then accelerating aggressive distribution growth is the best. It's a real value driver. So there is some risk in place. There's some risk that the pace of acceleration may stop accelerating. It's about 16% right now annually. But the outlook for earnings growth and dividend metrics favor the company's ability to continue aggressively growing their dividend, even if they have to stop accelerating or even maybe bring that pace down.
All right, well, let's take a look at another stock, CVS. Thomas, CVS is among MarketBeat's most followed and top-rated dividend stocks. So how is this company differentiating itself in the healthcare sector? And if you could maybe touch on what are the implications of this stock's diversification?
Yeah, right. So CVS is a bit of an odd duck in this group. It's a retail pharmacy with a consumer health business. It acquired Aetna to help expand into insurance, and it's doing pretty well with that. So right now, insurance is leading the business. The upside is that the best producing pharma retail company, or I should say that the upside is that it is the best producing retail pharma company due to its insurance exposure. But it's also the worst performing insurance company due to its retail exposure. So you got a little bit of that diversification playing off of each other. But the point is that the dividend is safe. It's the highest yield in the group, and it's growing. There's really no reason to think that the dividend is going to be cut, and every reason to think that it's going to continue to grow over the coming years.
Okay, and then there's Humana. I see commercials for this one constantly. But Q3 results for this company include growth and top bottom line strength. Guidance was raised, and the consensus for next year growth is substantial here. What's next for them, Thomas?
Right. So Humana has lagged UnitedHealth's share price over the last year or so, and that's probably because of the lower yield. It does pay a much lower yield, but that's offset by the outlook for growth. While UnitedHealth has the most aggressive outlook for dividend growth, Humana has the most fuel and the longest trajectory for dividend growth. It's got the lowest payout rate. It's got a lower distribution growth rate. So people that are looking for an extended amount of dividend growth might want to focus on UnitedHealth. And talking about upside, analysts see it having the most upside potential of any of these stocks. So there is that double tailwind to capital growth.
All right, is there anything else you want to leave our viewers with today, Thomas?
This is a great sector. It's got a low beta. It provides some protection from risk. It's got a growing distribution. I think that investors should just do a little bit of their own digging, pick the one that matches their goals the best and start building a position.
Perfect. Well, as we've seen, the health insurance sector indeed offers stable dividend paying stocks. And these three, UnitedHealth, CVS, and Humana, they bring their unique strengths to the table, especially for buy and hold investors. We're going to be keeping our eyes on these and many more right here at Market Beat. And we'll see you in the next one. Thanks, Thomas.